BlockchainIntel doesn't look at anything or doesn't try to trace back to anyone personally, right? I mean, that's not the purpose at all of the technology. Um, the purpose is to identify behaviors that can be related to fraud.
Hey everyone, we once again have another distinct pleasure. This time it's of Karen Hsu from BlockchainIntel. I have the great pleasure of having her join me today, and we're going to talk about all kinds of stuff related to uh, basically blockchain intelligence, uh, tracing, kind of watching the blockchain movements, seeing transactions, etc. How's it going, Karen?
Great. How are you?
I'm doing fantastic. This is one of those subjects that has a lot of if there's a lot of questions surrounding it on a lot of sides, and a lot of people, especially early adopters of cryptocurrency, probably don't even feel comfortable. It's kind of a brave new world of crazy new things that they don't really expect. So why don't you start out and just say what exactly does blockchain intel do, and why, and what kinds of companies have a need for it?
Okay, yeah, great. So, Blockchain Intel provides a fraud detection service. And what we do, or what we mean by fraud detection, is we really provide a score as to whether or not something is likely to be related to fraud, scams, anything that's going to hurt people. Um, and companies that use us include exchanges, they include corporate entities who are trying to identify proactively where that fraud is, or they're trying to prove that the data, sorry, the coins that they have are clean, and that's important for banks and other institutions who want to say convert their funds into fiat or other coins, right?
Yeah, so
So
generally speaking, um, there's a lot in a completely decentralized, permissionless system. There's a lot of things you could do that no one has control over, no one has to have knowledge over it. And while that's a beautiful thing in a lot of ways, some entities, especially legit businesses and things like that, are kind of scared by that prospect as well, right?
right, and they do this honestly for everything else too. With cash, right, which is probably the easiest thing to launder.
Hmm.
They're going to figure out and try to understand where that cash came from as well. I mean, it's not just with crypto. So don't want people to think that financial institutions are always just singling out crypto to begin with. I mean, they've had these practices in place for years to really dissuade and to capture, if that's necessary, any money launderers and bad actors.
Yeah, so as far as this relates to Dash, what a lot of people kind of are afraid of possibly is they think that one of the reasons they got attracted to Dash in the beginning is because they preferred a higher degree of financial privacy than something like, say, Bitcoin was able to give them. And they're afraid that this privacy is now going to go away, that
Mhm.
you're going to be tracing transactions and finding who sent them, and basically getting people in trouble for that.
Yeah, no. So that is absolutely not the purpose. So blockchain intel doesn't look at anything or doesn't try to trace back to anyone personally, right? I mean, that's not the purpose at all of the technology. Um, the purpose is to identify behaviors that can be related to fraud. I mean, that's the biggest thing. Now, in terms of private set in general, as the feature of Dash, right? I mean, this is something that is no different than coin joins, tumblers, and mixers on Bitcoin. And today, regulators know, and exchanges and other financial institutions know or have been able to see which transactions are mixers and tumblers too. So I mean, it's no different, right? And these exchanges, these financial institutions are not interested in tracing back funds to any particular person, right? That's not the purpose. Again, I mean, it's really just to capture when there's terrorist financing, um, or really, uh, really high types of money laundering going on. right? Really bad actors trying to commit fraud. So,
So what kinds of stuff can you detect? Like what kind of, obviously not giving me your trade secrets here, but what kinds of things do you see that, like, what do you looking at the blockchain, you see something, what kind of things do you see, what do you pay attention to, and what conclusions you kind of make from those kinds of things?
right. So, I mean, I think there's two things going on when we're looking at this problem. One is to look at the bad actors or to identify the bad guys. So we are trying to find out what patterns or what entities belong to dark markets, to scams, to thefts, to any kind of illegal activity. And on the other hand, we can identify patterns for good guys, right? The exchanges that have um, strong practices in place that are legitimate, that are well known, and so when you can say, well, this um, transaction is between good parties or parties that are, well known, then you've got nothing to worry about, right? It's only when it's directly related to a scam or to some kind of known terrorist um, or known terrorist activity, then you have something to worry about, right? So it's really looking at two sides of this problem, both from what you might call the blacklisting side, and the other side is like whitelisting.
Yeah, so what happens with the gray? What happens if, say, some random person is running a mining farm right outside of Montreal where it's nice and cold and they can keep their house warm with it. They got a bunch of crypto from, like, say, Dash. They mine a bunch of Dash from that. Does not have any association with any dark nets or any exchanges. And then they go and they start private sending stuff to their farmer because they want to buy local milk and things like that. And then the farmer also, privacy advocate, starts using that to then buy Amazon gift cards so they can buy stuff off Amazon and stuff. So there's all this activity which is hidden to a certain extent, but you can see it pop up, but it's not associated with either, like, oh, this is an exchange, then I know there's an identity here. And it's also not, oh, I know this is like a big time bad actor. It's just kind of like in the middle. How does that kind of get treated?
Yeah, so that again is um, goes squarely to what the score is for.
Hmm.
So the score is, on a scale of 1 to 10. So one is the worst. Sorry, one is the best, meaning the
Hmm.
least risk. 10 is the worst, meaning the highest risk. So in that case, I would say probably in your example, the
Hmm.
score would probably be closer to 1, because the big thing is um, uh, there isn't a relationship with a scam, right? There is going to be, maybe some increased score for private send transactions, but then the reality is, if there's no other indicator for nefarious activity, right? If there's no other indicator for some kind of fraud going on, then there's no reason the score would go up, right?
Hmm.
So um, that's the first thing. The second thing is, it's up to the financial institution and or the company, right? Whether it's the exchange or payment processor or just an enterprise, right? It's up to them to determine how they want to score, and really in the end how they want to react to these scores. Um, so there is flexibility there, right? So if you have an organization that's more um, uh, that has a large compliance organization that can, say, follow up on every sort of issue, then um, maybe they will. But what I've seen more typically is that they're pretty even keel about it, and they will really only want to follow up with the major issues, because it's an expensive process to go through and really investigate everything, right? You mean, because if you want to report something, you've got to have all the details there, and so they will um, be very sure, from what I've seen, if it's something that they need to report on. And in that case, they
Yes, and this is just a risk scoring system for, say, that would be used by a company like an exchange or something else like that, that's kind of in the financial regulation limelight. It's not like you're going tracing everyone's transactions and then
No,
just dumping them on broad strokes to say an authority or something like.
exactly. This is really a risk scoring system.
Mm-hmm,
Um, and I know earlier I said, well, what do we do? And I was trying to explain it in the context of what it means here,
mm-hmm,
to crypto, to Dash, in terms of fraud detection. But really, it's a risk scoring system. It's a risk scoring technology, and it depends on how the company and what country they're in, right? Because, for example, gambling is a bigger offense, let's say in the US in some cases than it is in other parts of the world, right? And it depends on what kind of gambling you do. And you can get into all sorts of, finer details around what that means. And that then impacts the score for a gambling transaction, depending on the country you're in and the type of gambling it is.
yeah. Now here's a hypothetical that might be a little bit on the edges of this. Say you have a company that operates a legal cannabis dispensary in some, I don't know, say let's just say Arizona for all, or California. Just say there's a legal cannabis dispensary in California that is tired of all the banking problems and tired of all the issues related to cash. And so instead they just decide to accept Dash um, for their proceeds. Now, because it's, does that mean that those Dash transactions are now scored? So, for example, say the company decides to run entirely off of Dash, which with volatility is probably a pretty risky proposition. But let's just say it pays all its employees and expenses in Dash. One of those vendors who just sells, say, something like is an ATM provider for just cash for just that part or something like that. They get paid in Dash that came from cannabis sales, and now they want to put that on exchange to sell that. How do you think that might be risk scored?
So that, um, well, if it's a well-known cannabis player, then that might be identified. Now, again, this is one of those very, I agree, it's a gray
Mm-hmm.
area, right? Because in California, this is entirely legal, um, in Colorado as well, and other states, but at a federal level, it's not. And so that depends on the company to report in the end. So if, yeah, I mean, because in the end, what we provide is the data, and um, they can do what they want with that data, um, and it's more intended to help them make the right decision. So it really depends on the company, I'd
Hmm.
say.
Yeah, so
You know,
some
yeah,
exchanges might be, all right, yeah, sure, that's fine. It's legal. They find that it has to do with the cannabis business, and they just think that's fine. But then there might be others that say, well, we're like 1,000% compliance kind of mindset. And so even though this is all legal activity from a legit business, we don't like the green plant, and we don't want that anywhere near our digital money operations. So
right.
we're just going to say, no, you can't do it with us.
Yes. Yeah. I mean, this is no different than some organizations I've worked with who, if they get 90% of their project funding from a federal agency, they don't do anything related to cannabis. I mean, this happened last year with, you know, a company that we had all worked together called NREL. They
Hmm.
were more nervous about anything related to, this is the National Renewable Energy Labs,
Yes.
um, and they were more nervous, obviously, because they're a federal agency, about anything related to cannabis. But then, and that's because they got all their funding from the federal government. Now, if it's an entity, a company, that's in a state like California, um, or Colorado, where they're not dependent on federal funds and they operate, just fine under state laws, where cannabis is legal and is fine, then they may not, have the need to report on these cannabis dealings. And again, this is a gray area not because of cannabis or because of Dash or because of crypto. I mean, this is a gray area because of our government, right? The
Hmm.
state and federal government are at odds. They basically don't agree. So in a way, it's, their issue. And I remember talking about this with a regulator, and he chuckled and said, "Yeah, I mean, you know, this is this is a dichotomy or a situation with, our government. It's not necessarily anybody else's problem,
Yeah, of
but
course.
it's something that we deal with, right?"
Now, regarding exchanges, etc., they clearly this is something that is new to Dash, in that in the past Dash has not had quite the same level of risk scoring available. And of course, you can easily enough risk score, say, Litecoin, because it operates exactly the same as Bitcoin. And even though CoinJoin and Dash's private send are extremely similar, and there's still like a different aspect to that. So, first off, do you think that the lack of having services like this available for the Dash blockchain, do you think not having that has impacted Dash's ability to get listed on some exchanges?
Oh, yes, certainly. I mean, it was very clear for exchanges like eToroX that they needed this type of reporting. And it was also because they didn't have Dash specific reporting, right? Um, and they needed that in order for the regulators to have the confidence that eToroX knew what to do and how to deal with different types of nefarious activity. So that was important, certainly, as the regulators get more up to speed and are looking at um, not just Dash but all other coins, right? They're going to be asking about, and I've talked to some of them, and I'm meeting with some of them about, how do other coins work besides Bitcoin, right? And so that's important. And I think in general, people want to understand. It's not just okay, well, here's a stick, right? And we're going to be watching over you, right? That's not the intent. It's more, let's understand what's going on, and if we can understand, then we know when to help you, when to back off, and when to, do X, Y, and Z, right? It's a lot of it's just a lack of understanding, and people naturally want to understand before they can, you know, make a decision to go one way or another,
Yeah, that
and
makes
especially now.
sense.
Yeah.
Yes, it makes sense perfectly that would be the case. And there's been a privacy coin conversation for a little while, because the cryptocurrency universe is full of all kinds of different projects, all kinds of different benefits, all kinds of things. But it seems like the advanced functionality that's number one in demand sometimes might be extra privacy features. And there's a whole conversation of, is this the heart and soul of cryptocurrency? Is this something that you kind of need to have? But more importantly, once you get to the next level, then you have the mass adoption world that's thinking, oh, this is all dark web drug money. If you have advanced privacy features, then all of a sudden, then you're just never going to be legit. You're always going to be something else. So, where do you think privacy coins like tend to land with that? Obviously, Dash is a little bit of a unique situation because it's trying to be mass adopted, and it also has a privacy feature where everything is public at the same time as it's private. It's just all dumped on the blockchain. You can all just look at it. It's not obscured. It's not encrypted. And so,
Right.
where does this place say? First off, how how in how in Satoshi's name did Zcash ever get listed on a bit license compliant exchange? It's like supposed to be the most secure, super anonymous, whatever. What happened in that situation? What could have happened? Of course, you might not have been in the room, right? But what happened in that situation where somehow someone would think the what some people would call the most private coin just got listed by a super a super regulated exchange.
Right. Yeah. So to answer that question, I'll first start with, the value of the blockchain and the reason why people wanted to use the blockchain technology itself is because of the transparency, right? And, the fact that we know each other, I know that you actually sent me, say, funds, and that, or I sent you funds, right? That's all clear on the blockchain. Nobody tampered with it. No third party, no government, no bank, nobody, right, can tamper with that because that's clearly recorded for everyone to see now and in the future. So the transparency is actually really important and is valuable to all of us, which is why we use the blockchain and we use crypto. Now, having said that, totally understand the need for privacy because you don't want people you don't want to know looking at your transactions, which takes us to Zcash and others who have come out or come about because of this need. Now, in talking to Zuko, he explained one of the reasons why they were able to get that bit license is because he went directly to the New York regulators and said, hey, this is who I am. This is who my organization is. We're not here to hide anything. This is how our technology works. And essentially, from my perspective, gave them the comfort that here's a human being that they can talk to, that they can call upon if there are issues. There's an organization behind him, a very reputable organization. I mean, Zuko has an incredible reputation, right?
Mm-hmm.
And so that was helpful. I also think that's no different than the Dash Core group in a way, right? I mean, here are people who are front and center and are very visible, like Ryan and the rest of the team, right? They're very visible in talking about how Dash works. And that, I think, is important. And for Zcash to do that was probably, in part or in large part due to the fact that the team, Zuko included, was able to um, let the regulators know and give the regulators comfort that this is not some shady thing that they're just trying to push out there and
Mm-hmm.
um, not really follow up with or not have any kind of stake in, right? And so that's important, and especially as Dash gets or uh, it gets more broadly adopted and wants to get more broadly adopted, that is important, I think. Now, on the other hand, right, I mean, if we look at really the number of um, private transactions that are sent with Zcash, in the beginning it was much lower because definitely in the beginning it was much lower and probably even now because um, people weren't using the shielded transactions. And you look at Bitcoin, people aren't using coin joins and tumblers as much as you'd like to think, or as much as some other people, would make
Do you
it.
know off your top of your head what those kind of general percentages might be for first Bitcoin, then you'd say Zcash, and then Dash?
Yeah, so for Bitcoin, the latest check I think was about 4% was mixers and tumblers, or were a mixed or tumbled transactions. I don't know about Zcash, and then for Dash, I believe we just talked about it was at 1%. So the numbers are
So
very
Bitcoin is
low.
really a more evil, nefarious, dark web privacy
Oh
coin than
yeah.
Dash.
Oh yes. That I can tell you hands down. And talking to regulators, if you look at what terrorists are using, it's Bitcoin, uh, not Dash.
Now,
Um,
probably, I know people are going to jump on me for if I don't address that what terrorists are using is probably US dollars for the most part, or probably other
oh yeah.
currencies. As far as
Yes.
cryptocurrencies, if they are at all,
Right.
which is probably
Yes.
extremely rare, it would be
Right.
probably the most adopted one.
Yes, absolutely. By far, it's still the US dollar. Absolutely.
Mhm.
If you look at all currencies. And then, yes, within just crypto itself, Bitcoin is used more than other coins.
Yeah,
But
that's an
yes, I
interesting
mean,
point if
yeah.
you think about it, because Bitcoin is, first off, relative to any other cryptocurrency, pretty much, it's the slowest and the most expensive to use. And it's also, its privacy functions are not built in. And in order to use them, you have to send a bunch of transactions, which takes a lot of time and money. So if you think about it, Bitcoin's probably the worst privacy coin you can imagine. However, it has utility because of network effects. So in
Yeah.
that way, it's kind of like, it might seem like the privacy coin debate of, is this going to be illegal drug, dangerous drug money or whatever? It seems like bad actors are not going to use the best privacy tech, because sometimes the best privacy tech might preclude them from network effects. And that's kind of the biggest thing that they're going for. So it seems like people use the worst privacy coins as long as it's kind of not, kind of unregulated, kind of not able to be stopped, as long as it's, they can easily flip it somewhere else.
Yeah. I mean, yes. And yeah, so yeah, so first of all, definitely USD is used more so than any other coin or any other currency. And but to your point there, I mean, I was talking to one regulator about how he was looking at Al Qaeda, and
Mm-hmm.
I think it was Al Qaeda was using Bitcoin, but they weren't using it in any kind of private capacity. It was all basically in the clear, even the IP addresses, right? They controlled the region where they were in, and so they didn't feel. Well, he was guessing they didn't feel the need to really hide their tracks as much because they controlled the region really well.
It could have been dumb
But it,
too.
yeah, yeah, or they just weren't capable, right? Or
Mm-hmm.
sophisticated enough. And in any case, it was very apparent who these guys were. You could track them. All the wall addresses were very clear to identify, and so it's not as nefarious like you're saying in terms of people trying to cover everything as some people think. Now, having said that, yes, of course, there's a lot of um, use of other ways, to hide their tracks. So, and they're not the only ones, the only bad guys out there. There are a lot of other bad guys that they use Tor and everything, all the other ways to mask what they're doing.
Yeah.
Um,
No, on the same privacy coin angle, Dash and Zcash and, Pivx, Zcoin, whatever else you call, all have this dual feature where you can send stuff transparent, linkable, or unlinkable, opaque. Now, what about something that's privacy by default? That by the very way it works, every single transaction is encrypted, and there's no public blockchain to analyze. How
mhm.
how would an exchange deal with something like that as far as risk scoring? If, say, an exchange is uncomfortable using Dash, or was, because of the possibility of stuff that they don't know about, that they might accidentally be a party to money laundering. But now with blockchain intel, now they know that they can be safe using accepting Dash transactions. That same exchange, if some coin that has privacy on by default and it's all encrypted and there's no public blockchain to look at comes for integration, how do you think they'd handle that?
Well, so if you take a coin like Grin, for example, which was designed entirely for privacy, right? I've talked about this with people and exchanges. How are you going to manage that? And the response so far has been is even with something like Grin, there is a way, because with Grin you have to establish some kind of connection, and when you do that, whether you do it through HTTP or something else, there's a way to track that IP address, because you have to open up that connection in order to make that transaction. And so if you have KYC'd a person, then you can validate that this IP address lines up with what information you have already. And so that's how you could validate it. So all I'm saying is there are ways to do this for exchanges for different coins, and it depends on the coin itself. But certainly, if a coin wants to get listed, they have to have some way um, of showing, that there's an ability to identify bad actors and the really illegal activity.
Yeah, so what about, say, this gets maybe a little more technical, but it's, and if it's hey, I have no idea. Then that works well because I have only a faint idea anyway. What if you have some kind of a crypto note based thing where in order to see where a transaction came from, you need to have the view keys to that transaction and say I bought a bunch of Monero around at the same time because people who were yelling about how it's the best on Twitter, and I just said, well, might as well have some just in case. And so I got some, and now I'm like, you know what? All I really want to buy is coffee, man, and no coffee place around me accepts it. So I'm just gonna sell it. So I go to sell it, and they say, hey, wait a second. We don't know where this came from. And I say, well, here, I'll show you the view key that shows from my wallet to you here. This shows where I got it from. And then they're like, all right, that's good. But where'd they get it from? What if this came from a dark net? And I'm like, I can't shake them down and tell them they're not going to do that. Is that a dead end in that case? And they say, no, we're not going to do this. This is too risky or whatever. Or is there another way that a chain like that can become a little bit more compliant for the purposes of operating on regulated exchanges?
Yeah, so I don't know a lot about Monero. It's not
Mm-hmm.
something that we're supporting today, so I can't say um, definitively. But I would think that in your case, it would be the exchange that would have to be able to figure out what the path is and what the threshold, right, is for proving, some kind of provenance. Um, I don't think you would have to prove it, is all. It's more the exchange that has to figure that out. So I believe there are some solutions out there. I'm not sure though, but yeah, that's one I
Yeah.
don't have a lot of knowledge about.
And also back to your previous point, maybe if I have a couple $100 and I'm just like, look, I I want to spend this. I want to use it on something because it's big enough that I don't just want to forget about it, but it's also small enough to where what like my huge drug kingpin empire, this is all I got out of it. Like really, it's it's not a problem. So if it's like a couple hundred
Yeah,
bucks, they wouldn't care. But if it's like a couple hundred grand, then they start to be like, we need view keys dating back as far as we can, as far as the eye can see, up to the
right.
miner.
Yeah, I mean, from what I've seen, yes, it's a couple $100. It's not as big of a deal as if it's okay, a few $1,000s, and it's a few $1,000s every month, right, at a set time.
Hmm.
That starts to get suspicious because then why is it at a set time? Questions like that come up. Why is it every month? I mean, are they doing some kind of payment mechanism or subscription or whatever it is to, buy
Hmm.
arms on a regular basis from somebody? Yeah, so it's that, and that goes back to what we are talking about before in terms of how exchanges and companies evaluate a lot of different factors, right? Not just did they use a privacy coin or not, right? It's not just one thing they look at. It's a combination of things that they'll look at together, and it's depending on that combination whether or not it's really something they want to investigate further.
Yeah, and so finally, I noticed that a lot of exchanges, obviously, um, Blockchain Intel hasn't partnered with Dash until very recently, and there's a lot of exchanges that have supported Dash no problem before, and then there's some that like we mentioned, eToro X, and there's of course a few more that may or may not surface over time. We'll see, but there's clearly a category of um, ones that are a little bit more risk averse and ones that just are a little bit more like, yeah, that's fine, we're fine. Now, what do you see? How do you see the trend going? Do you see it kind of staying that way, where most services are fine without something like this, without advanced risk scoring, but there's always going to be a few sticklers that need it? Or do you think it's going to be now you're going to see all the other exchanges be like, well, yeah, we're really going to be cracked down on if we don't do something, or we just don't. Now that we know a little bit more, we see our competitors going through all this stuff, and we see people accusing us of like there's a big theft, and some of it ends up on our exchange. Now we're going to jump on the higher analysis bandwagon. Which do you think it's going to be the second of those?
Yes, I think it's going to be more the latter, which is as people use cryptocurrency more, there's just going to be more fraud going on, right? Because
There's more
there,
activity going on.
there's just more activity, period. And to protect the users, to ensure that people feel safe and want to use an exchange, right? They're going to want to have these services in place. I mean, no exchange wants to report that they were hacked into or that somebody, you know, did something illegal. I mean, nobody wants to talk about that because that puts a shadow on that exchange. It puts a shadow on not just exchange, but any service. Um, and that's terrible for the brand. Now, on the other hand, yes, I mean, regulators are getting smarter. So definitely they have the tools in place. They know what they're looking for, and they will be enforcing more than they have been. Um, but I think more of it is just, people will, and it's going to be both, right? It's going to be companies want to protect their users, and yes, they also don't want to pay fines to the regulators. Um,
Hmm.
but I but I do think, this is just my personal opinion, that in the long run, you know, companies are trying to make a profit, and if they can't keep their users around because the users don't trust them,
Of
then
course.
they're going to go business, right? And so they're going to respond more to the fact that users want to have a safe place to transact, and just by virtue of more people being on the networks means there's going to be more crime that will be attempted, right? And so the question is, how do you prevent that? How do you
Yeah,
catch that?
absolutely. Well, speaking of which, that's kind of the last thing I wanted to go over is really quick about thefts. So obviously something like this can help trace thefts. And obviously that does not mean that if they employ a advanced privacy solution to obscure the point A, point B, they like you've invalidated that. But if there's like 1,000 dash gets stolen in Ireland, and then somewhere in Ireland, Northern Ireland, UK, there's a like 3 suspicious large dash transactions get dumped on exchange by someone who hasn't really done much anymore. Then you're going to start to connect that. But let me put a tale of 2 different theft victims, one of whom goes to the authorities and one of whom does not. There's Mr. Entrepreneur who just hears all this blockchain stuff and just sees it go up to 20 grand for Bitcoin, 1,500 for Dash, whatever, in late 2017, and then it starts going down again. And then when it kind of levels off, he just says, "Well, I just know this is going to be the future. I'm terrified of the impending, say, pension crisis in whatever country I'm in. I don't know if I can trust that I need to diversify my wealth to make sure that it's going to be there for my kids." So he puts 100 grand worth into crypto. Then someone steals that at some point, and now that's devastating because he worked his whole life, made a big sacrifice businesses, bought something at relatively. I mean, let's be honest. The bottom of the bear market is in when is it, late 2018, early 2019, is still very high for prices compared to what you could have gotten in the past. So he puts a lot of money in there. Say then he loses it all. He's going to go to the authorities and say, "Hey, I have my buddy at BlockchainIntel who's like helping me look at this. Can you help me get my money back?" So that person is going to pursue that. Take person B. All right, so they heard about Bitcoin in 2010. Somewhere around 2011, they decided to start mining. They put a little laptop on that just started running a little mining program. Before you know it, they have a couple thousand Bitcoins floating around. It starts to go up. They play around, switch it into different coins, maybe buy some stuff at like Newegg, or then they buy, they test something out on like Open Bazaar, or like they throw it around a few places, but mostly they just have this random stuff they kind of mined. They might have traded for another coin that went further high, like further up, but they're just kind of casual nerd hobbyists. They're just playing around with this stuff, and before you know it, it's worth real money. And now they're kind of terrified because it wasn't real money when they're playing with it, and now it's just there. Now it is, and they're kind of like deer in the headlights. Like, if I don't move, no one will see me. And then someone steals it. Someone steals, say, $500,000 worth. They still have enough to where they're going to be okay and comfortable, but they decide not to report that theft, not to go to blockchain intel, not because that they can't, and not because it's ill-gotten, that they did anything wrong in getting it, but they're kind of afraid of scrutiny on their whole past dealings, not because they were nefarious, but just because it's a mess. It's just experimental. There was no reporting back then. There was no nothing. They don't know how they would even say, okay, I can prove all this was mine. This is where I got it from. I can show it reliably because I don't know, some random dude on the internet gave me like 5 Bitcoins because they liked my blog post. And then now those 5 Bitcoins are worth a lot of money. Oh no. They're in that situation. They'd rather just no one look at it at all. Oh, what happens with that second person? What can you tell them?
Well, I mean, if they really don't want to report it, that's their decision. Now, having said that, I mean, if they do report it, it's not like it's going to turn out badly for them, especially if they have good reasons. Maybe they forgot. I mean, the fact is, we're all learning right now, and there's a lot of companies. There are a lot of companies, right, who, when they got the Bitcoin for services that they did, um, there were no rules. The IRS didn't have very specific guidance. The regulators didn't have any really good ways of explaining how to deal and record and all of that. So that is all being established today. And people are still working through that, is what I'm trying to say. Is it's not like the IRS is hunting for anyone who had, say, $100 worth of Bitcoin.
Mm-hmm.
And um, you know they're going after the big whales, the big guys, the big criminals, right? They're not looking at smaller transactions. um, but I think it is important for us as we move forward, right, not to be afraid of the new rules, because we're all going to want to be under that same kind of oversight, because that will mean Dash crypto is mainstream. And so yes, you can choose to hide from it, but at some point you have to meet the new reality too, right? And figure out the best way to deal with that. So we certainly would love to work with anyone who wants to go back and find out what happened. There are other companies that specialize in tax services, and it may just be that this person doesn't know what the tax rules are, right? And that's part of the discomfort and not wanting to do anything. But once you understand what they are, then it might make more sense and not be as bad as that person thinks. So I would certainly um, look at what's available and what's out there to help establish, you know, what it is that you do have to pay in taxes, if that's the biggest worry. Um, and then, yeah, I mean, really think about how you want to be in the future, not just how it was in the past when there weren't any rules, but really, what's it going to be like going forward. Um,
Yeah. So in
and I think
particular,
that's
if they lose money in a theft, there's this kind of old school saying of um, not your keys, not your Bitcoin. And that sort of thing of if you control it, it's yours. If someone takes it from you and now they control it, it's now theirs. This old school mentality. So if someone, for example, does not, if they can prove that they held the wallet that had it before someone else made off with it, is that going to be enough to say that that's theirs and it gets returned to them, even if they can't prove that their physical identity bought that and control that wallet? Even if they just say, "Well, look, I'll get you into my computer. See, look, I have access."
Oh yeah, I mean, you can, if you can prove definitely that you own the wallet and someone stole the funds from you, then yes, you can get your funds back. I would think, I mean, that's how I've seen it work right now with law enforcement, right? I mean,
Hmm.
if you can prove you have the wallet, and there's many different ways to show that you have owned that wallet and that wallet is yours, right? Then they can still then it can track who stole the funds from you. So that's, yeah, I mean, that's entirely doable. um, Now, yes, I mean, you will have to go back and explain to somebody how you got those funds to begin with, but that's what the blockchain is for too, right? it records everything that's there. So you'll be able to see, okay, even if you don't remember it, it's not in your records. No, you got this from some exchange or, from some masternode or whatever it is, right? There's a way to track that back. And
All
so
right.
if you have, yeah, there's nothing to worry about, then it'll all come clean.
Yeah, well, this has been a fantastic chat. Where could people find more about what you do?
Sure. So on our website, www.blockchainintel.com, and feel free to reach out to me. Um, I'm just Karen at blockchainintel.com, and also on Twitter. So please reach out to us. There's some articles. Thank you, Joel, for publishing the
Mhm.
one yesterday.
No
And
problem.
there's a few others, I think, coming out this week. So please look us up, find out more, and I'm happy to share any more information that you're looking for.
All right. Well, thanks, and I hope you have a great rest of the day.